Okay, so yeah, welcome everyone. Welcome. Yeah, good evening everyone. So if you can hear me loud and clear, yeah, good evening, welcome. So welcome to everyone from whichever part of the world you are joining from. Okay, so if you can hear me loud and clear, like if the mic is 100% clear, type one in the comment section. If you can see my screen, everything is clear, just type one in the comment section. I want to be sure that everyone is hearing me before I even start. So if you can hear me loud and clear, just type one in the comment section. One, like if everything is perfectly clear. Nice. Happy new month, everyone. Happy new month. Welcome. So let's give everyone like others that are still yet to join because I believe most people. Okay, let me update some of them and tell them that we are live. Let's give others time to join because I believe like a lot of people have been waiting for this day because I've received a lot of messages. Let's go live. When are you going to share your strategy, a bit of your strategy or something like that? You get. So today we get to talk about it today and tomorrow, same time. All right. Don't worry. I will try as much as possible to answer our questions. I will try as much as possible to answer our questions before the end of today and tomorrow. Yes, I will try, and I will also cover some part of the strategy, like the free one for you guys. Yeah. At least we should use it and make money this this new year. Okay. So yeah, welcome guys. So once it's 9:05, we'll kickstart. So I'm waiting for others to join. Once it's 9:05, we kickstart. So let me update all of them and tell them we are live. Okay. We are live. Okay, so welcome. How's it going now? How's it going? Yeah, welcome. In as much as you are joining like maybe this is your first time joining our live section, do also like this particular video. I think there's a button for you to like it. You understand? Subscribe if you're new. Yeah, because I'm trying as much as possible to start dropping more educational content from henceforth, right? So you can also subscribe. Share it to those future or aspiring gold traders, those that would love to trade good, those that love good because of its volatility. Okay, so 1 minute to go for us to start. 1 minute to go. Yeah, I see there's a lot of questions in people's mind, like a lot of questions. So what I'll do today, we'll first of all talk about the strategy, then tomorrow we'll finalize everything, right? So I think that would help at least. So let me change my screen. Let me change the screen. Um, Let me change my screen so that you could see. Let me use my laptop screen so you can see it clear. Just give me a sec. Let me change the screen. I think this one is a bit clear. So let's delete everything on the screen. I think this one is a bit clear. What's this? I think they are done. No, they are done. I think they are done downstairs. I'm near the door. Check this. Sorry about that. Okay, yes. It's being recorded, right? Okay. So it's 9:05. Let's kickstart. Let's just Anybody that joins, maybe they'll watch the video or something. Okay, so let's just start. I just want to go. I love going straight to the point. That's one thing with me. So I love going straight to the point. Um, and I would love it to be an interactive class too, right? So in as much as I'm trying to share one or two things with you guys, but I would also love for the class to be interactive. So all your questions while we are having a section, do well to like maybe jot them down, type them down somewhere because I believe some of you are using your phone, so it won't be hard for you to type it, right? So type them out somewhere because I'll be going through the comment section first, right? Divine Joseph said, I love this. I love this. He said, I've backtested your strategy on Demo and it's amazing. Yes, that's Demo. Now, I have a life account funded with $12. I want to put my work into action. I think that's really great. That's really great. I would also show you steps on how to go about with it now. Okay, so let's talk first on what we need to focus on. So, like I said, today we'll talk on a bit of the strategy because I just want to give out a free strategy that you could use, especially for those, because I believe that's how I also started. Let me remove this from the screen first. Let me take this off the screen first because I believe that's how I personally also started. So now, for those that might be having difficulties with the maybe it's not sharp or something, what you do is I think the top right corner is one setting icon. Tap on it, click on. I think how's it called? Um, what's wrong with myself? I've forgotten like totally. Okay, because you can increase the quality of this YouTube live in case it's not sharp because I think you can increase it to 1080. Is it 1080 pixel? I guess. Yes. So you can increase the quality, tap on quality, increase it to 1080 because most of you because of the settings on your phone it can reduce it to 360 pixel also. So you can increase the quality also. Okay, so now first off we'll talk on please pay attention because it's going to be a 1 hour section, right? I don't want to waste any of our time. So first off, we'll talk on strategy. We'll talk on because it needs to come complete. We need to talk on risks, money, and trade management. And then lastly, we talk on a bit of psychology, trading psychology as a whole. So this is like the three parts we would cover in this series or in this 2 days live section. Okay. So this is what we'll cover in okay. So this is how we'll cover all. Okay. Please don't spam the comment section, please, so everyone can follow up. I would answer every question. I will even tell you when it's time to ask your question, please. So I will not be going through the section now, this comment section for now. So don't type now. Okay, there's just strategy. Only when I say you should type, maybe I want to be sure if you're hearing me and all that. Okay. So now, first off, we'll talk on the strategy. Now, this is one thing I want you guys to know first, right? Because especially when it comes to this YouTube of a thing, I have seen a lot of people, right? When it comes to this YouTube of a thing, you see that the most searched keyword on YouTube when it comes to trading is always strategy, right? It's always strategy. Now, I've said something before and I will keep on saying it again. Strategy is not all what you need to be profitable in trading, right? So strategy is just like the foundation. I just want to throw more light on this before I even start showing you anything on the screen. First, because I know a lot of people are eager. It should be the foundation, not everything. I see used to see people saying things like, if I catch this guy's course, if I catch this guy's strategy and I understand it very well, that's all. No, that's not all. So strategy is just like a stepping stone, right? It's just like a foundation first. After strategy, there are other stuff that you need to pay attention to in order to become profitable. Now, each traders or each of your mentors' strategy comes in pack, right? If you don't pay attention to everything the strategy comes with, you will still not be profitable. I don't know how many of you have seen maybe those your friends that are into trading, right? the analysis are top notch. If they said gold will drop from here, it will drop. If they say gold will buy from here, it will buy. You get, the analysis are always accurate. But all of a sudden, when you give them an account, it becomes very hard for them to do it, or they start blowing an account. Why? You get, these are the things you should ask yourself. Why? So it tells you that it's not all about strategy. It's not all about analyzing, telling you that market will move up here and it's move up. You get, there are other stuff you need to pay attention to. I don't know how many of you can get a weakness, right? There are other stuff you need to pay attention to come out profitable at the end of the day. So now these are the things that differentiate the profitable traders and the unprofitable ones. Right? These are the things. So most of the time, we feel like, most people now, the other part of people now, they feel like if the strategy is not complicated, if it's not like this, if it's too easy, then it's not working. No, right? I used to say something, right? There was when I started forex trading. I think 2 years ago or 3 years, right? When I started forex trading, there was a strategy I was using then. Like in 1 week, I would pass a prop firm, get funded. You understand? I was just passing prop firms very perfectly, right? But when the losing part like came in, before you know it, I started changing strategy. I was like, this thing is not working again. Let me switch. Had it been I know that it was not all about strategy, I wouldn't have changed that strategy. But I've still been using it to date because it was working perfectly, right? So you see this thing about changing of strategy also, what it does is that it prolongs your period of being profitable. So strategy is not the problem. Ask yourself before you learn that strategy from that person, and maybe after you've learned it, you've seen the thing working for that person, you've tried it, maybe you back tested it a bit, and you feel like, okay, I think this thing is working. But all of a sudden, when the losing part comes in, you feel like it's not working again. It's not the strategy. Maybe you are not paying attention to what the strategy tells you to do in order to come out profitable with it. That's why I said each strategy comes in what? In pack. Strategy, like now, let me explain what the pack might means. It might be each strategy comes with its minimal risk to reward. This is one thing I tell my students every time. Strategy comes with its minimal risk to reward. Yes. Okay, it comes with its minimal risk reward. It comes, some of them even come with their own specific risk management strategy, right? So it comes with its minimal risk reward. It comes with sometimes its own risk management and other stuff. How some of them comes with their own trade management concept and all that, right? But if you pay attention to the strategy, you learn the strategy, and you don't pay attention to the risk reward, at the long run, you will come out profitable. You will come out profitable. You will not come out profitable. It's by luck. Maybe that month or that week was so good. You get. So as you are learning this strategy, try as much as possible to pay attention to other stuff that I would make mention of. You get. Okay, so as you're learning the strategy, try as much as possible to pay attention to all that stuff. Carry everything alongside. I used to say it as a beginner, it is even, you are even more, you even enjoy it more. Why? Because at this particular stage, you are learning everything, so you know how to pack everything, you know how to carry everything along. Than to pick one and run first, then all of a sudden you see yourself, find yourself coming back again to pick the other ones. Okay, so now let's go straight to the point. Let's go straight to the point. And let's talk on strategy. Okay. Um, just give me a sec. Let me pick something real quick. Please, sorry about that. Sorry about that. Okay, so now let's talk about strategy. Let's talk about strategy. Now, I used to say it's according to correspondent or how I was taught. Strategy is not all right. So to me, strategy is just 10%. I know a lot of people will argue it, like they will doubt it crazily. They will say it's a lie. Strategy that should be at least 50%. Then you get right. So now risk management to me is 30%. Risk, money, and trade management. Each of them has 10%, right? So to me, it's 30%. And then trading psychology is 16. I've said it before. If you go to my last, what's it called? My last YouTube live, I think, was it a year ago or 2 years ago? You see that it's the same thing. Nothing has changed. All right. So it's just that it's just a tweak in the strategy, just to advance it, just to make it more neat and straight to the point. I love things being straight to the point, right? So now strategy is just what? 10%. Okay, so now For this trading psychology, if you can fix this one and these two, remember strategy comes in pack, right? If you can fix these two, this won't really be a problem for you. You get, because the foundation of trading psychology is always fear. That's the foundation. Check. Ask anybody you want to ask. The foundation of all their problem, you understand, is always fear. Fear. You understand? Fear is like the foundation itself. You understand? So that's one. So if these two are not in place, it affects this one. That's when it gives room for what's fear. You've noticed that if you're pampering an account, maybe you're betting that account, I don't want to blow this account, that fear of losing that account. Once you have that fear of losing that account is gone. It's better for you to do what? Withdraw that money. It's only by luck for you to do it. So it's better for you to do what? It's better for you to do what? Just withdraw and leave, right? So now let's talk on strategy. Let's go straight to the point, right? So now on gold, right? I have different concepts, like different setups, but it's the same strategy. It's just purely price action, right? So the only thing instead is that we just have our XT zones, the F and R strategy. That's what I use on gold, and it's what I've been using for like 2 years now. Okay, so now let's talk a bit on gold and the strategy I use and the one I can at least you should learn from there. You will be good to go. Yes, it's recorded after this live section. You can come back, click on the live section on my YouTube. You'll be able to access it. Okay. So now, first off, we have different wave pattern that gold moves in. I know a lot of you that used to go through my videos already knows this, right? So now we have different wave pattern that goes moving. So now the first one is a normal structure, normal market structure. Let me delete this first. So the first one here is the normal market structure. Okay. Sorry about that, guys. Sorry about that. I was looking for the my charger. Okay. So now, yes. Okay, can you hear me now? Please type one and let me be sure if you can hear me. Type one in the comment section. Are you good? Good. Type one in the comment section, please. Okay. So let's continue. So there are different wave patterns that gold moves in, right? So I have 4 wave patterns, but in this class, I think we should talk on 3 because the fourth one might be a bit complicated for you guys. So let's talk about what we'll focus on very well in this class is the first one, right? And different concept of entries, right? So we'll focus on the first one very, very well. We want to go to the second one, the third one, but I'll show you how it looks like in case you see them on the chart and so that you'll be able to identify them, right? So now let me show you an example of how it looks like. Okay. So now the first wave pattern is normally how market moves in an uptrend, right? So you know how market moves in an uptrend. What does it do? It creates a series of what? Higher highs and higher lows. So it creates a series of higher highs. What's wrong with this network? Please hope the network is not bad. I don't want anyone to miss this section at all. So it creates a series of what? Higher highs and higher lows in an uptrend. So you see market do what? Pushes up, right? Creates a higher high, higher lows, higher high. This is like normally how market moves in an uptrend, right? This is the proper way of how market moves in an uptrend. Very simple, right? So if you notice how market has been moving, whenever it creates, let's say this point now, which is now a resistance, right? So whenever it takes it out, what happens? It changes that point to what? Support, right? So whenever it creates a new resistance, right, it changes it as what? Support zone, then before it continues to the upside. Okay. So now Same thing, since I know that this is how market has been moving in an uptrend, right? According to these concepts, changes its previous resistance to what? Support, breaks out, right? Retests, you understand? So clearly, if it takes out this new resistance, what should I be expecting again? Right? What should I be expecting? I should be expecting what? A buy of this zone. Hope you're following. I should be expecting what? A buy of this zone. Why? Because it's just like me saying markets price will do what? Repeat itself, right? So now I should be expecting what? A buy again of this particular zone, right? So now this is the first structure, very simple. You get, this is like the first structure of how market moves. This is very, if you want to know how the opposite is, you know the opposite of this is the downtrend. So you see an impulse move to the upside, a retracement, a break to the upside, a retest, a break. So you're expecting a retest again for market to do what? Follow this way. This is the first structure. Now, one thing with us is that if it's simple, we feel like it's not working. But I'll try as much as possible to explain it more. So this is the first one. Now let's go to the next wave pattern. Now the second wave pattern here is the one. It's still an option. I'm still using an option as an example, right? You see a push to the upside, right? Creates higher high, higher lows, break to the upside, retracement, right? Or a correction, depending on how you call it, right? But I don't like complicating anything. So you see how that push to the upside and a retest. Now, notice something first. Now, one thing you should know first, I think I should say this now. One thing you should know about good is that gold respects zones. Gold respects key levels a lot. Right? You can call it supply and demand zone. You can call it key level. You can call it support and resistance zone. Anything you want to call it, it's still the same thing. Gold respects zones a lot. It moves from zone to zone. Check, just go and back test good. Gold moves from what? Zones to zones, from one key level to the other, key level to the other. So if you understand how these key levels works, you'll be able to know how which of them you should hold to, which of them you should jump out from, and you get. So that's one thing you should know, right? So now this second wave pattern, you see how market moves, push to the upside, retest, push to the upside, retest, right? Push to the upside. Now watch what happens here now. When it came back to retest, now we are expecting what? A break, right? We're expecting a break that. But now what happened? It respects this zone now. Remember, I tell you that go respect zone now. So it comes to this zone and respects it. Okay? So now, once it respects this zone, if market respects a zone, what do you expect? A retracement, right? A push to the opposite direction. So it has respected this zone, so we are seeing a push to the opposite direction. So now, once market comes here and we see a confirmation telling us that this zone would hold, this zone that is currently at now, if we see a confirmation that this zone would hold, know that this second leg, right, according to the second wave pattern, this second leg is the one that is going to break out of this zone aggressively. Now, this one happens most of the time when there is fundamental and even when there is normal market. I will go to the chart, I will show you most of them, right? So now, this wave pattern happens a lot on all time frame. That's one thing you should know. It happens on all time frame. You can see it on weekly, you can see it on daily, you can see it on 4 hours, even 15 minutes, 5 minutes if you see it there. So the opposite of it is the downtrend. So clearly, I know that if I was on a trade already here, and maybe my TP was open and my stop loss a bit below, right? So I know that if this market respects this point, comes back here and gives me a confirmation, I would even want to add another position because I know that this second leg is the one that is going to do what? Break up this zone aggressively, right? It's the one that is going to take out this level, this high here, this resistance level. It's going to take it out aggressively. So the opposite of it is what you could see in a downtrend. So just turn it upside down, then you know what it looks like in a downtrend, right? So now the next point, the next wave pattern now happens. This one happens when we have like when the trend wants to change, maybe from an uptrend to a downtrend. This is where you see this one, right? So let's use an uptrend as an example. Push it upside, a retracement, an impulse move to the upside, retracement, right? A break to the upside. Now watch what happens now. When it's coming back to retest, we're expecting a retest of this zone, right? Now what happens? It fails to hold here and pushes into the next zone. You know that's one thing we go. If it breaks out of a particular zone, it's going to the next one. So if it fails to hold here, it moves to the next zone. So now once it comes to this particular zone and gives us confirmation that it's going to hold, your target shouldn't go beyond this high here. Why? Because market might start consolidating, moving sideways, or it can just break, retest here, and start going to the opposite direction. So it's two things. market can start doing what? Consolidating, or it can just break, retest, and start going to do what? The opposite direction. So in this case, these are our key levels, right? Our zones. So this was the level where we were expecting it to hold, but what happened? It took out that level, right? It broke out of that particular point. So in case like this, if it gives you confirmation that this zone would hold, make sure that your TP shouldn't go beyond this high, this next level, this next zone, right? This resistance level. Why? Because market might start doing what? Moving sideways, or it might just change. The trend, the structure might change. Now, this is just this is more like a structure on how good moves. You get it happens on all time frame. Now let's go to the main chart now, and let me explain all these things very well for you. But I'm not going to go intense like deep. But I will try as much as possible to still throw more light on things you can still use to be profitable. Like you could try to go back test after today's class and maybe come back tomorrow, then tell me what you feel like if it's working or not, right? And also you could trade it, use it to trade this new week, and then maybe confirm if it's working or not. Okay, so now this is even just this one is our recent charts, right? Just the recent chart before this consolidation here, and then this break. Now market is coming back to retest. Now if you look clearly from this our recent charts, you notice what market is doing here. Now at this particular point here, this is the second wave pattern here happening at this particular spot. I can go to 30 minutes. I think it happened on 30 minutes. This is it here, the second wave pattern. All right, so you see, sorry, let me shrink the chart a bit. Okay, please pay attention. So now, the first structure of gold, right? You see a push to the upside, a retest on this zone, right? A break, a retest on this level, a break to the upside, right? A retracement, a push to the upside. Now it failed to break this particular point, but what happened? It comes back to this particular zone. Now that second wave pattern, knowing clearly that the second leg is going to do what? Break out aggressively. So that's what happened here. Then minor retracement, a push to the upside, a minor retest on that zone again. What happens? A push to the upside. Now there's a concept on how we draw our FNR zone, not just this retest. There's how we mark them out. That's why I call them the ST zones, the FNR strategy, right? The FNR zones, you can call it the FNR zones, right? Now it is because of how we mark them. Now this is one thing with FNR zone. The full meaning of FNR zone, FNR zones, and the full meaning here stands for what? So frequency and recency. So that's the meaning of that FNR zone, right? So that's the full meaning. So now the that frequency stands is how frequent is that zone? Is it a frequent zone, right? And also, is it a recent level? Is it a recent zone? That's one thing with gold. I trade based off recent levels, and I put my targets based off the frequent zones. You understand, the old ones. I pick trade based off the recent ones, right? And also depending on the time frame, right? And also do what? Place my targets based off the frequent one. You get, right? So now I'll explain. Now this is what you should focus on. If there's any other things, if you don't even remember any other thing on this live section, try as much as possible to remember this, because this is what I basically use to trade gold. Right? You won't see me use trend lines today. You won't see me use psychological levels today or any other stuff. The only thing I would use on gold, because I tell you that gold respects what zones a lot. So this is what I focus on. This is the main confluences of my strategy, right? So now this is it. So now this is how we mark them. Now for a zone to be a valid FNR zone, right? Two candle must open and close in the direction of that retracement, right? So two candle must open and close in the direction of retracement. Now if you see this push to the upside, right? After market came to retest this recent level. Now before this break to the upside, this was the recent level. So dropping down, we know that this is the recent level on this 15 minutes time frame, right? So before it came back to retest this recent level, this 15 minutes recent zone, you get it pushed to the upside. Then all of a sudden we see a drop to the downside. Now, how many candle has close to the downside? We only see one here. The second one is 2 yet. Maybe when the market opens, that's when the second one would open. So now for a zone to be a valid F and R zone, I can't mark this point as an F and R zone. No, not yet. for it to be valid, two candles must open and close. So the first one is this black candle, the second one is still yet to open. So even if the second one is a gold one, so far as it's beneath this zone, it's a valid F&R zone. So for now, it's not a valid one. Why? Because two candles has not opened and closed in that direction. All right. So is this one now a valid one? Yes. See the first black candle, the second gold still beneath it, right? Before this break to the upside. So it's a valid one, right? Is this one a valid one? Yes, it's a valid one. This one here. This one here before this new one. Let me zoom the chart very well. Please pay attention because I might not go really deep. You understand? So now is this one a valid one? Yes. Why? Because after the first black candle, the second good, all of them are still between it. That's why you see that when the market respected this one below, it pushed to that one, it still respected that one and it what dropped to the downside. Right? You see, so it's a valid F&R zone. So our F&R zone, what we use them to is point of entries. That's what our F&R zone stands for. Point of what? Entries. Point of retracement. You know, we are if we are all points that we can maybe flow with the trend, ride with the trend. Okay, so for an F&R zone to be valid, two candles must open and close in the direction. Let's go to other time frames. Let me see explain this. Let me delete this. So now, is this low valid? Because now this is a point of retracement. You see, when the market dropped, all of a sudden it decided retracing to the upside. Now, is this low valid? Because this is a retracement to the upside, right? So yes, because why? The first gold candle has opened and closed. The second one has, this black one has opened and closed. It's still above this F&R zone, so it's valid, right? So that this particular low now is valid. Let me still go to another time frame. 4 hours, because we draw it on all time frame. Let me zoom it. Sorry. So is this high valid? No. Why? Because the second candle is still yet to close. So, but if the second one opens and closes still under this line, not above it, if it closes under this, this our F&R zone, then yes, perfect. It's a perfect F&R zone. Why? Because if market comes to it, we are going to see a reaction. That's what F&R zone stands for. If market comes to it. Now, if you notice what I've been doing, I've been paying attention to what recent levels. Now, this structure, this how we call it. I will get to that very soon. Or let's just focus on the strategy first. Right. So now, one thing you should know first, I said for an F&R zone to be valid, two candles must open and close in that direction of that retracement. That's one point. Right. That's how to mark out the F&R zone. Because if you don't know how to mark it perfectly, that's another thing. Now, the next thing is, where do we mark them? Now, if you notice how I've been drawing that stuff on the body of the candle, on the body itself. Now, this one is not valuable. I'm just showing you. You see, I do not pay attention to the wicks, the body of the candle, the body of the candle. Now, let's start going back to those smaller time frames, right? So, if I want to see that place, if it's a zone on 4 hours, it's also a zone on 1 hour. So let's go back to 30 minutes. Now, this level also. Now, this level that the market came back to test, you get this level that the market came back to test after that drop. You just came back to touch this recent F&R zone, right? So you see the body of the candle. We do not pay attention to the wicks, the body before that retracement, the body itself. For the high, it's the highest body. For the low, the lowest body, right? So that's one thing. So now you see this zone, this line you're seeing here are my entry points. So even if I wanted to use pending orders, right? So these lines are my entry points. Okay. So those lines now, if I want to use pending orders, these are the lines, these are the numbers I use, these ones here. These are the ones I use, these are the numbers for my entry. That's my entry. Now, this is just one, right? Now, the next thing here is you ask yourself now, how do we now use it to do our top-down analysis? Because I just want to go straight to the point so that we'll have enough time to ask questions. Now, the next thing is that, how do we now use it to do our top-down analysis to know what we are looking out for? You get it? Now, oh, God. Don't mind why I'm laughing. It's just someone's comment that is making me to laugh. Like, it's really, really funny. So now let's use it to do top-down analysis, right? Let's use it to do our top-down analysis real quick. Okay, so now I start from the weekly time frame. Now let me break down the time frames for you, how I do, because I'm a day trader, right? Sometimes I swing some certain setups and I scalp some certain setups. That's one thing with this strategy, the flexibility, because as a good trader, you need to be flexible, right? There's nothing like must when it comes to trading. That's one thing you should know. There is nothing like must, right? And mean, in as much as I'm showing you strategy, doesn't mean that there is no loss. Now that's why I said each strategy comes in pack, right? So if you don't pay attention to other stuff the strategy tells you to pay attention to, when the losses come, it will look as if the strategy is not working. But if you pay attention to other stuffs, when the losses come, it will just be like tip, right? Because you know that one win will do what, recover everything. That's the power of the strategy. That's trading. When you don't when you don't how will I even put it, you're not afraid of losses again. That's when you know that yes, your profitability is close by. Okay, so now let's use it to do a quick top down analysis. Now the weekly time frame and the daily time frame are for long term view, right? So the weekly, yes, it works very well on BTC. Yes, yes, yes. So now the weekly and the daily time frame are for what? Long term view. Now this is where these are the time frames. Zones from these time frames are for long term, right? Zones from these time frames are for what? Long term trades. Long term what? Trades. Right? These are the time frames. These are zones from these time frames are trades that I can swing. That's why I said they are long term, because most of the time it takes time before market gets to the zone. And once it gets to the zone, you know how we used to place our TP, the concept on how we place our targets might be the next weekly, the next daily. You get, so that's why I said they are for long term view, right? So now the next time frames that I pay attention to is 4 hours and 1 hour time frame. So 4 hours and 1 hour time frames, they are my main key level time frames as a day trader. So those ones are my key level time frames as a day trader. So those time frames are way that will determine what I should be looking at for the day. You understand what I should be looking at for that day. Okay. So the next time frame now is my 15 minutes and 5 minutes. Sometimes I use 30 minutes. You get, so my 15 minutes and 5 minutes are my entry and confirmation time frame. So 15 minutes and what's it called? 5 minutes are my entry and confirmation time frame. So this is how I break down the time frames. So please pay attention. This is what we'll be doing. So 15 minutes is where now I will now show you entry confirmation since you can pay attention to, at least for this start. Okay. Okay, let me delete this. I think that's that. Now let's head straight to our analysis. Remember, we pay attention to recent levels, right? So now this is the weekly time frame. I'm going to use the horizontal array. This is where you can find it. Yeah, the horizontal array. Okay, to make it show like this on your screen, on your trading view, you need to favorite it by clicking on this star icon or the star icons. Okay, so now on this weekly time frame, we're seeing that gold clearly is in an uptrend, right? You can see the move. It has been pushing up. Gold is clearly just taking out this overall high. Remember how we mark out the F and R's on the body of the candle itself. So this candle took it out, did a minor retest, and now it's pushing up, right? So that's one. Now, apart from that, this overall high, now we have the recent level. Now, before this pushed it upside, you notice that there was a minor retracement here before I push it upside. So this is the recent level. But now, remember, weekly is for long-term view. So before market even gets to this particular point, it needs to pass these two zones. Now, remember, I said gold respects levels a lot. Gold respects zones a lot. So for it to even get to this particular point, it needs to pass these two. This one here, this weekly, and this other high here. Okay, so now that has one. So that's why you see I will not mark out this one. I will not mark. I just want my charts to be straight to the points, right? So that's one. So we only have this high. Sorry, this one that market took out. You understand? I'm doing the minor retest, and now it's above it. You get. So now the next time frame now is the 4 hours and the daily time frame. Sorry. So the next time frame here is the daily. Now on this daily time frame, now daily also has its own overall high. So now remember, I tell you that all these old ones are like frequent ones. You understand? This one is like the old ones, the ones I look at for targets. But now market has taken out that level, this overall high. Now you see I'm using trend line tool in case you're asking which tool is it. This is trend line. I just marked it straight. Then in between it, I can write the time frame where that line is coming from. So I can write daily. All right, so if you click on it, see the settings here, text, make sure it's highlighted. All right, the coordinates, no, this one is not needed because you understand. And I just changed the color, nothing else. Right, so that's for this. Now, this daily time frame, this is the zone. See the way I marked that out again, the F and R zone. Now, that's the frequent one, right? But now, where are the recent ones? The recent ones are the ones here before this push to the upside. These are the recent level before this push towards the upside. Okay, so now we have things like one candle. Is only my student knows this. One candlestick retracement. My student knows this. So this is daily recent level, right? So all these ones are recent levels. Okay, why these ones are frequent level. Now there's a difference between an overall high. This is and recent highs. So, but all those ones, maybe as time goes on in the advanced section, we'll talk on that, right? So, but now I just want to go straight to the point and entries at once, right? So now these are daily. Now, before you even move to the smaller time frame, this is where people get these mistakes. Like you learn online and you still don't get it very well. Before you move to the smaller time frame, try to know why you're marking out all these things. Try to know why am I marking out this weekly, right? Why did I mark it out? Okay, why did I mark out this daily time frame? Now, on this daily time frame, this was the overall high we were targeting, and all of a sudden, the market took it out. So we were waiting for a retest on this overall high for us to continue to the upside, but it didn't do that retest. The retest was just a minor one on 30 minutes, right? So we were waiting for a proper retest on this daily candle, like a normal candle, to come out from this daily and retest before pushing to the upside, right? But market didn't give us that retest, right? So now, if it opens maybe more Sunday night, right? The market opens and comes down now, maybe give us that retest, give us that confirmation that this zone would hold. Yes, someone knows the continuation pattern, this level, right? So if it gives us confirmation that this zone would hold, then we know that we should start entry for buys to the upside. But if it doesn't and pushes down, where is the next recent level on this daily time for the next zone? We know that this is on this continuation pattern, right? This point here, this is a continuation pattern on gold, right? So this is it here. So we know that you should get to this particular point. According to continuation pattern, it's indecision, although those ones are a bit advanced. I don't want anyone to get confused. So that's why I don't want to mention it at all. Okay. So now this is the next recent level. So if it fails to hold from this high, this level, and continue to the upside, then this is this point. Now you hear things like, but boss, what if market does not even come to any of them and starts pushing up their other methods? The strategy comes in back. Strategy comes in back, right? So now this is the daily recent level, and this is just like a frequent zone. The previous one, the overall high, and all that. So market has finally taken it out and is currently above. So now you see, I've explained what I've explained what I'm like, why I marked out this zone. So now I can now comfortably move to 4 hours time frame. Now, if you want to really quench the noise around you as a day trader, I think the time frame you should pay attention to is those daily 4 hours and sometimes 1 hour. Those are the two time frames, right? Daily, 4 hours, and most of the time 1 hour. I'll explain why I say 4 hours, right? I'll explain things very well for you. Just let's flow, let's flow. If you don't understand, come back and watch the video again, right? So we have this high here that we're expecting, this overall high of daily. The market should respect and continue to the upside. That is, if it opens, it push up down to this place, gives us a confirmation and start. You should enter and start looking for a buy. But if it doesn't, then this is a recent level on daily also. Now, if you look very well, it's also a level on 4 hours too. It's a zone on what, 4 hours time frame. You can see it's a zone on way 4 hours time frame. So if it comes here now, gives us confirmation, what should we be looking for? A buy to the next. Now this is it now, to the next 4 hours time frame. Now if the zone or my entry, the level like where I mark that zone and market is respecting it, if it's from 4 hours, your targets, your next TP should be the next 4 hours zone, right? If it's from daily time frame, your target should be the next daily time frame. If it's a weekly time frame zone that is respected, it's going to the next weekly time frame zone. If it's 15 minutes, going to the next 15. If it's 1 hour, it's going to the next 1 hour. That's how it works. Except you know the trend already. You've done your big overall top-down analysis, and you know the direction. And that's when you can now hold. Okay. Yes, it is the same thing on smaller time frame. Okay. So now, if it comes to this particular point, where is the next recent 4 hours time frame? So if you respect your ways, there's a 4 hours frequent zone here. Remember, I say frequent zones are for target, right? So this is 1 year. That's my first TP. This is 2 year. That's the second one. Then maybe this high here. You get why? Because why am I targeting all this way up here? Because the structure is still an uptrend, right? So this is 2. Okay. You see now, since it's a daily time frame zone and also a 4 hours time frame level too, so that's why you see that my target first is 1 year, this 4 hours level here, 2 year, and then yeah. Okay, so you see those are the levels that I'm paying attention to, right? So now, what is now that confirmation that these zones would hold? That's what now we do on 50 minutes and 5 minutes. But before we go to the 50 minutes, let's see what 1 hour looks like, right? So now on 1 hour time frame, this is that level, this is that 4 hour zone and daily time frame zone also. Now on 4 hours, let me see something too. I think there's a recent level here too. There is a recent low here that I didn't mark on time for us. Okay, so let's see what 1 hour looks like too. So at that particular point too, there is, I think, 1 hour a bit low. 1 hour on is a bit low, right? And 1 hour also has an overall high now. Now I'll explain, because most people will be like, but boss, what if market does not come down to any of those things? And that's when all this one comes in place now, right? So now this is 4 hours, the one we just mark out on 4 hours. This zone is also a zone on 4 hours and daily. That's why I didn't mark much on 4 hours. But now this is now 1 hour time frame. Okay, so now this is also a level on 4 hours that this market can decide to do what? Just tap and start pushing up. Okay, so now how do we know that okay, this market is not going to come down again? Or maybe you understand, maybe you just take out. Now this is it here. I will still come back to explain this one, but I want to explain that entry confirmation. Then I will now bring it to this bigger time frame, because all these strategies the same thing on all time frame. Now let's go back to the entry confirmation first before I come to explain how to know if this market is not coming down again. Okay. Now we have first this level, this daily time frame level, because it's a bigger time frame zone. The bigger time frame controls the smaller time frame. It's stronger than the smaller time frame, right? So this 1 year, first the level we're expecting, if it will go from here or that other one below this 1 year. So now this is where that entry confirmation comes in, which is what 15 minutes time frame. Now on 15 minutes, what do I want to see that will tell me that these zones would hold for me to start looking for a buy or sell, depending? But now we are talking about buys, right? Now this is it. Now before I even explain the confirmation, I want to explain something to you about trends, right? Now in an uptrend, what does market do in an uptrend? Market creates series of higher highs and higher lows, right? Market is also permitted to do what? Take out highs. This high here is permitted to do what? Take it out, change it to support, right? And do what? Breaks it again. So market is permitted to do what? Take out highs in an uptrend. That's one thing you should know first, right? In a downtrend, market is permitted to do what? Take out lows. Create a low, retest, then do what? Take it out. Create a new low, do what? Take it out. This is what a downtrend should look like, right? Now, in an uptrend, market is not even permitted to be taking out what? Lows. Okay? Market is not permitted to do what? Take out lows. Okay? So now in an uptrend, market is not permitted to do what? Take out lows. So if it takes out the first low, right? Takes out the second one, it should signal something to you that what? Market is not going up again. Okay? That what? Market is not doing what? It's not going up again. Ebube said, I should trade live, not on Saturday. Go, this person does not know me. Go and check very well and come back before you drop your comments. I love comments like this. Go and check very well and come back, okay? So now, in an uptrend, markets, I wonder why he's here if he does not believe, guys. I've traded live a lot, like live. So now, in an uptrend, market is not permitted to take out lows, okay? Market is not permitted to take out lows in an uptrend. So if it takes out the first one, takes out the second one, it should signal something to you that market is not going up again. Change your bias because it's going to continue going down. That's one thing. First, that's the concept, because in an uptrend, market is only permitted to be taking out highs. Okay, so now according to the structure of our this thing, our trade. Now, if market is in an uptrend and all of a sudden we see a retracement like this, our market has created a new F and R zone above here. Remember how we used to do it now, F and R zone. So now, if we enter for a buy from this level and start going here, okay, we know that this is a zone, right? And we know that it's going to react. Market is permitted to take it out because it's an uptrend. Okay, so now in a downtrend, market is not permitted to take out these highs. So if you take out the first one, you should stop here and continue to the downside. But if it retests and takes out the second one, it should signal something to you that market is not coming down again. It's going high. Okay, that's one thing. Now let me take it to the neckline. Now this is where we talk of the neckline. You hear a lot of my students talk of neckline. There's even one I watched his video, right, about his withdrawal from funded next. I think is it 14K? I mean, how much? Right? He was saying F and R strategy, and the guy was confused and was like, "What is F and R?" You get. So now this is it. Now this is where neckline comes, because I believe a lot of you would have heard about neckline a lot, right? So now, this point of entry, so all these zones, all these buy zones, right? These levels, those ones we are hitting at. Now, how do we know if they will hold? This is where that neckline comes in. The neckline break comes in. Now, what I want to see on these 15 minutes, if the zone is from 4 hours, we come to 15 minutes, right? If it's from 1 hour, we just come to 5 minutes, right? So now, this is it now. This is what I want to see. Now, if market comes to this zone that we are expecting a buy from, I want to see market react first. You know, it's a zone and it's a bigger time frame zone. So while one candlestick is still reacting, maybe 4 hours, you see only one candle reacting. Come on the smaller time frame, multiple candles are created already at that particular zone. So what I want to see the multiple candle do is that it should come here, push up. Just pay attention, please. Push up. Then I want to see a minor retracement. So once you do that minor retracement, we've marked out this point as our neckline. Our F and R zone, the way we mark our F and R on the body, we mark it out as our neckline. Now, the next thing again I want to see is that I want to see market do what? In an option, what is market permitted to do? Take out highs, right? And what are we expecting here? A buy. So in a buy is what happens in an option. Buy is a move to the upside, right? So I want to see market do what? Take out this high. One. So how does it take it out? I want to see a full body candle, like a healthy buy candle, take out this high, this neckline, right? So now once it takes it out, it has given me confirmation, because my entry now would be on the next candle as it opens and it's retracing, and my stop loss below that candle that breaks out of that zone, and my target will be the next 4 hour zone, first off, right? The next 4 hour zone. Now, this is not that it won't retrace. This is like a first confirmation. This is where people get it wrong. Remember, I said how many highs the market needs to take out from, right? How many highs the market needs to take out before it's confirmed that it's going up, or how many lows does it need to take out before it confirms that it's going down? Now, if it creates the second one and takes out the second one, that's extra confirmation. This market is not coming down again, it's going up. That is, it's telling you that this zone has hold. It's not coming down again. It's going up. Right? So, but the worst that can happen here, right? The worst that can happen here is that this market does not take out this high. After creating this neckline, it just comes to this low, right? Takes out this level, retests. Then what happens? It takes out the low. So we created a new first low, took out the second one. Then clearly, you know that this zone is not holding again, it's coming way down. You get? So because why? If it wanted to hold, it won't be taking out lows. 2 ones for that matter. It won't take out this first low, take out the second one. You get? Now, according to how I trade, I start from the weekly time frame, not the monthly time frame, because I just noticed someone asked about the monthly time frame. Right? So now this is the concept of what's behind the neckline. Right? This is the concept behind the neckline, right? This is how we look for confirmation. So if it creates 2 highs and takes out 2 highs, then clearly it gives you confirmation that this market is not coming. Like I can now hold confidently to my TP, and your TP should be a valid point, right? Because you don't just put your TP randomly. I used to say put your TP at a point that you know that this is the next zone, right? Even if this market wants to retrace, it should get to this zone, because it respected this 4 hours. At least it should get to this zone. That's where your TP should be. And then put your stop loss at a point where you know that If it gets to this point, then this trade is totally invalid. Yes. Now let me explain something again about this neckline concept, right? So now this is one concept we use. Now let's go back to that 4 hours before I show you another confirmation we use on gold. Now this is it here. Same concept you are going to use or we use on that neckline is what we are going to use now to know if this zone is going to, if market is going to drop or it's going to just maybe continue pushing up. Now this is 1 hour. This is the level. First, this 4 hours, this daily, and then the second one here. These are the only zones we are expecting market to buy from. Okay, so now what if market does not come to this point and this two? Then how do we now flow with this trade? Now we have a high here on daily. If you go on 30 minutes that I used to go. Okay, yes. Now when, okay, I'll answer the question because I don't want to get distracted so I don't forget what I wanted to say. Okay, now this is it here. We have a high here, right? Now pay attention now how to know if this market is not coming down again. We have a high here and we still have one here on this 30 minutes time frame. We have two highs. Now, how do we know that this market is not coming down? If it takes out this first high, retest, takes out the second one, then know that there's trouble. This market might not come down again. It's pushing up. So the worst that can happen is that it just push through a minor retest there and I just continue and flow with the trend towards the upside. Okay, so that's one. That's one. So now let's go back to the 15 minute and let me show you other candlestick confirmations that we also use. Now the second, for those that might just, okay, this neckline, because I used to hear a lot of people say, purpose, the neckline trading concept, because most of the time I use sniper entries, I don't do all this neckline stuff, right? So now this is it here. If you don't want to look for neckline because sometimes you feel like, and one thing you should also know is that this strategy doesn't create neckline all at all entry points. There are some entry points that market will just come tap it and do what, melt back up immediately. Now if you see this 30 minutes zone here, there's a zone here on the 30 minutes time frame. Yeah, this buy here, that when this market came to respect this zone, if you go on 30 minutes, it's the same zone there. This is it here. You can adjust it a bit. This F&R zone here. Now if you come, that's 30 minutes zone, right? So if you come on maybe 55 minutes, you notice what happened here. See it here. When it tapped it, it pushed up, created a neckline here. And this was the candle that break it out. But this one now is just like a short one. So in cases like this, you see it's already close to the target point. Because if you go on 30 minutes, where is the next target point? After you tap that point, this is a zone on 30 minutes. So your next target should be the next 30 minutes time frame. Right? So it's already close to the TP in cases like that. So some people feel like, boss, what if something happened like that? Now this is where right, this is where now other confirmation comes in. Things like candlestick confirmation. Now, before I even explain that candlestick confirmation, do you know what these things I just showed you, this neckline, what it means? That neckline I showed you that you should create something like this. You get, then we mark out that neckline, we breaks it out, we enter for our trade on the candle that breaks out. If it's healthy buy one, we should look for buy. Okay. Now look at this pattern very well. You see that it's the same chart pattern you all know. It's still the same W pattern, right? It's the same W pattern. Now, why didn't we just wait for the what's it called? The second leg and just enter from it there? You get, remember W patterns, we have different types of W. Right? Now you see now the concept, but most people they don't even pay attention, they don't know. Now these days we have different types of W. The one that the first leg is lower than the second one, right? We also have M pattern, right? The double top, the double bottom, right? And we have the one that the first leg might be lower and the second leg longer. That's why you see people use things like what? Trend lines, right? That's why you see people use things like what? Trend lines to know where the second leg would stop. You see things like this. And you see people use the opposite one here, like channel, they use channel, things like this. So know where the second leg will stop. Now, my own issue is that I don't want to know where the second leg would stop. That's one thing, because sometimes you don't see me with trend lines or anything. My own is that before market creates the second leg, it must create a neckline. Yes, that one is confirmed. Before market creates the second leg of the W or the double bottom or how you call it, it must create a neckline. So market creates the first leg, creates the neckline before it creates the second leg. So I might not know where the second leg would stop, but I know where the neckline is. And if market takes out the neckline, I'm entering from this neckline, and that's what you are seeing here. That's the concept. So remember how structure is. Now, if it takes out this neckline, let me shift this a bit. Let me expand this. It's not you giving me what I want. Okay, let me shrink it back. Now, if it takes out this neckline, that's my entry. If you do a minor retest on this, it's still my entry. Breaks the second one. Extra confirmation that is going up. Now, it's still the same thing with this. That's where you see people use things like, what's it called? Trend lines and all that. You get it? So that's it. So before I delete it again, I just wanted to explain so that you know that it's still the same chart pattern. Just that I just show you a different concept or a different approach on how to follow it. You get, especially on good as extra confirmation. Now, apart from chart pattern, we also have candlestick patterns that we pay attention to at those zones. Now, at these particular zones, there are two candlestick patterns I pay attention to. One is, let me draw how they look like. I can still show you a picture. Maybe you can search online. You see how they look like. You can call it doji or these doji candles and everything, but one, I call them one hanging man. That one, the first one I do, and this second one, sorry, excuse me, shooting star. So we have the hanging man, which is this one, and then we have the shooting star. So I want to see this shooting star at this buy zone, and I want to see this hanging man at a sell zone. Okay, so that's one thing I want to see. I want to see what the shooting star at a buy zone and a hanging man at the opposite direction, which is the sell zone. Now let's do an example. Let me go to 1 hour first. Let me just show you randomly first because I don't want to really like confuse a lot of you, right? I just want to show you what it looks like real quick. Or should I just mark out a zone? Then let's mark out a zone on 4 hours. Then we go on the smaller time frame, like 15 minutes, 30 minutes, to look for confirmation using the shooting star or the hanging man. Let's look for a zone. Just once you see a zone, just point it out for me. So you can't even point it out. Okay, let's look for one ourselves. Okay, looking for a zone where the market retested perfectly. This one retested on this continuation pattern. Recent one, this one here, continuation pattern. This one at this level here, recent zone. This one here, you see how market needs to respect those recent zones, right? This one here, you see recent zone. This one at this particular point, this one just did a small extension to the downside before it continues to the upside, right? No, the Excel is not too much. Ah, God, these people. I will show you an example. Let me show you that it's not, the Excel is not always too much. Just calm down. When you practicalize it, that's when you know that it's not too much. Now, let's mark out zones. This is one here. I just want to show you all these buy levels, all those zones, and all that. We have one here around this area too. This is a continuation pattern. Only those that are using it knows how it works. So let me draw a box there, so that I'll be able to know that it's a continuation pattern. I just want to look for zones that I can use as an example, even if it's just one. I don't want to go too much deep in the charts. Okay, let's just use this one as an example. I think this one was perfect. Yes, let's use this level as an example. Okay, so now this is what time frame is this? This is 4 hours, so we are going to 15 minutes. Let me draw a box around this so that I'll be able to track it and locate it on the chart. If I can locate it real quick. Okay, this is it here. Now, at this particular point here, I think what even really happened at this particular spot was that candlestick pattern. Here, you see why I said the neckline might not happen every time on the chart, right? If you notice, it's the candlestick pattern that happened at this particular point. Now, see it here. You see the morning star. This is it here. You see, this 15 minutes time frame for confirmation on, and this is the zone of 4 hours. You see that morning star around that area. You get it? Because in this case now, if you want to look at the candle, the neckline, you see this as the neckline. This way you even mark out as your neckline normally. And this was a candle that break out. This would have been your entry, and this would be your stop loss. below the candle that breaks out, then you target the next zone. I believe it did not even hit your stop loss, right? But that one is way long now. But using this candlestick pattern now, you see why I said sometimes, right? It might not be neckline. Neckline might not happen, but most other case, the neckline will happen here. I wish I can see your examples real quick and just show you guys. Then we move to the other stuff because I don't want to waste our time. We've already spent 1 hour, right? So I just want us to go straight to the point, real quick. This one just came with a weak activator and pushed up. This one also came with a weak activator and pushed up. Now, this is where the neckline now happened. I think this period market was very volatile. I think this should be news, right? When was this? Okay, this was Monday. Spiked down. Then I think this period market was very volatile. Then this was where the neckline now happened. This was a candle that broke out. It was very big. So in cases like this, I used to wait for a retest if it's too big. Now this one just came activated. So I'm looking for a good confirmation of that neckline to show you. Right, those zones. Let's go back to a bigger time frame. It will be easy to locate a zone there. So you see those confirmations from that place. Now those ones I've showed you the shooting star example there. So let's look for another zone. If I'm trading now, it's very easy to just track them down. But now that I'm teaching, I'm trying to guys, just calm down. I'll try as much as possible to answer our questions, right? Very well. Don't worry. All your questions will get answered. And look for levels. I think there's one level here too. This market came back to retest. Let me see 50 minutes what it looks like. So I'm just trying to locate those entry points for you and make it very easy for you guys. You understand? Okay. Don't worry, you get to ask your questions very well. You get to answer your question. Now this is this one. This is the retest here. Sorry. This was the retest. This is that 4 hour zone I just marked out. This was the retest here. So let's zoom it very well. So now here, I think this one even comes out perfect now. And let me explain this one. Remember, I told you about healthy candlestick. I believe this one even showed it very well. Now look at this particular structure. When the market came into that 4 hour zone, please pay attention. It's not yet question. I'll give you time to ask your questions. Now see what happened here when market pushed to the downside, right? Although it did a minor retest here, then it pushed into this zone, pushed up, then it broke out of this minor retest here, this minor pattern here. You see it here. This was a neckline. To me, it's a neckline, but let's look for the perfect one. Now this is a perfect one. Then it broke it out, created the second one, broke it out. This is extra confirmation that this market is not coming down again. It's doing what? It's going to the upside. Okay, it's going to the upside. That's extra confirmation, right? After it has taken out the second neckline. Now this is it here. Now this was the first break. Look at the candle that break it out. This is the first neckline here. Now look at the candle that break it out. You can see that it's not a good buy candle. It just opened, pushed up, then melted. It had longer wick above. So in cases like this, we wait for another candle to do what? Contradict this one, right? So in as much as you're waiting for a candle, the body of the candle to break out of it, shake the candle very well. That's why I said a good, healthy, bullish candle, right? So now see this one now countered this. Now it has the opposite, longer wick below and tiny body above. So in cases like this, as the next market opens, retraces, that's when I will do what? Enter for a buy. And my stop loss should be below this candle that breaks out of this zone. So those people that were saying the stop loss will be big, this is 15 minutes time frame. How many pips is this? This is 1.3, this is 13 pips stop loss. So it's nothing like the stop loss will be. The only case you can see is maybe this kind of break. In this kind of case like this particular one, right? In cases like this, you wait for a retest. That's one thing. If this candle that broke out was spiked with a big one, then what I would do is what? I wait for what? A retest on that zone. So it will now become, so if it spikes up maybe to this point, then what I do is I wait for the next candle to retest back to this level, this zone here, this neckline. Then my stop loss will be below that candle. Okay, so that's the case. Now, after it did this, it created a second neckline, broke out of it. You understand? Entry, stop loss, or you just move your stop loss from here to the break even of the next entry. The same way you did on this one, the same way you put your stop loss, that's how you move it to the next low of that candle that took out that high. Right? Because now it's an extra confirmation that this market is not coming down again. You understand? Then boom to the upside. Or you go back to 4 hours time frame to look for your next TP. Where is the next 4 hours time frame? Because if you are entering from 4 hours, your next this TP here should be your next TP. First, this continuation pattern, this level here, this is a continuation pattern. I'll explain it maybe tomorrow. Then this next target will be here. Okay. So that's it. All right, so that's just majorly it. So what you do is you still go through this video, you get to understand it. You can't expect to understand everything in one day. That's one problem I do have with people. So I should keep teaching this tomorrow. Okay. Okay, so let's go to questions. I just want to make this thing very quick. Tomorrow we'll continue. All right, tomorrow we'll continue. We'll talk on calculating of pips on gold. That's risk management. All those ones will complete it tomorrow. All right. So let's go to question. Let me answer questions because it's already 1 hour plus. So let's take questions. Hey, now all those questions you have been jam-padding. Like it's time for you to start dropping it. Okay, so guys, you can drop your questions now. Drop your questions, the issues you're having, and everything. I'm going through the comment section, but please don't how will I put it? Don't spam. No, I don't mix it with SMC. It's very pure price action. Nothing concerns me with MCs. I don't like complicated stuff. I like something being easy. You get? I don't like it being easy. But please don't spam the comment section. What if market retraces from a 1 hour and refuse to retest on the one? Then once it gets to that 1 hour, maybe go to 5 minutes time frame. See the structure it's bringing. If you create the first neckline, the second neckline, then you can flow with it there. You get? That's one thing too. Someone is still asking which strategy. I said I just made mention of it earlier before you started. I told you the ST zones, the F&R strategy, right? It's my strategy I've been using for 2 years now on gold, right? Now the confluences I use, the major one, the main major confluences is what the F&R zone. That's why I said if there's anything, just know how to plot it perfectly. Because any mistakes you make, any small mistake you make would cost you your account. You get any small mistake you make would cost you, it will cost you money. Now, these are the pairs, because I just see someone ask which pairs. It works on BTC. Let me mention most of the pairs I've tried it on. Right? It works on BTC USD. It works on GBP, JPY. It works on NAS 100. Also on US oil. It works on our gold, our normal gold that we use, right? Which other pairs have I tried it on? I've tried it on volatility index, right? Like VIX, all these VIX pair. I've tried it today. It works perfectly on those pairs. Okay. Don't worry. All these things we'll talk on it tomorrow, right? How to hold pairs and all that we'll talk on it tomorrow. How to hold trades. Sorry, don't mind me. Fear and all those things we'll talk about it tomorrow. Those ones are a bit advanced side. I just wanted to lay a foundation of the strategy very well. Oh, someone is asking me how do I trade news? Nice. Nice. How do you know a valid F&R zone? I said for a zone to be valid, 2 candles must open and close in the direction of that retracement, right? And also how to know if it will hold is now bringing in this neckline, these candlestick conformations, and understanding price action. If you understand the strategy very well, you might not even need to do all this neckline. You don't need to do all this this chart pattern, this candlestick pattern. Sorry, you can just enter the trade directly, sniper entry as it's just tapping that zone without weak. I'm in already. That's how I trade because I've mastered the strategy very well. I understand it. Most of my students even do that. They don't even wait for all this confirmation. It's only these beginners that wait for this confirmation just to play it safe. And now, one thing you should know also, the minimal risk reward for my strategy is 1:2. If you don't pay attention to 1:2, forget about it. Because this strategy used to give me like 1:10 in some trades, 1:8, 1:6. You get. So that's one thing. But the minimal you should use to become profitable with it is 1:2. You'll still be coming out profitable at the end of the day. Get. I've showed you guys example. If you go back on my YouTube channel, check all this my prop firm challenge, those trades I used to take. I used to do 1:2, 1:2 on those challenge. I don't do 1:6, I don't do 1:3. Take all those challenges, always 1:2. Now, at the end of the day, do we make money? Do we withdraw from it? Yes. That's the main thing, okay? So for this saying, I should talk about sniper and try. I think that one we're talking on the advanced side, which is tomorrow. Just when we'll talk. Today is just for the beginners, right? I just want them to have a clue of the strategy, so that in case tomorrow we start going to the advanced side, the deep part, you will not get confused. That's why I'm starting with this. Okay, don't rush it. It's gradual, right? And also there's a form I would love you guys to fill after this class, right? There's a form I would love you guys to fill. Now, do well to join this Telegram channel. Let me share it with you guys, because that's where I would carry the discount and everything, even the free giveaway and everything I will do after this class. Do well to join this Telegram channel, right? So that you'll be able to get along and learn. So there's a form I will share this, so you can now share what you would love me to, like all your questions. You understand things that you would love me to talk very well. I think tomorrow I would I would spend more time, even if it's 2 hours. You understand? Tomorrow we'll spend more time, so that you will learn it very well. Okay, so let me share you guys the form. No, not the form. I'll share you the group, so that from there I'll drop the form there. So you drop what you want me to talk on. My team will go through it. We'll filter everything. The most common 10 questions. That's what we'll also treat tomorrow, right? So I just want to drop everything there. Don't worry. Don't worry. You, even if I don't answer it on the live, I will answer you through email. Yes, I will answer you. Don't worry. I will take time and answer you one after the other. One after the other. Okay. How do I even share it here? Okay. I think. Just give me a sec. Why don't you host webinar on the trading days? I don't used to even do webinar. That's where you got it wrong. I don't used to do webinar. You see, I don't cash you. Why would I just leave my students and my own trading and be doing free webinar online? But I'm trying to start doing a weekly live section. My classes are always 10 o'clock, 12 o'clock during trading days. So we used to trade. If I see set up, we trade live. You get. So this is why I caught you, right? So I don't used to do. Now let me drop the Telegram link, right? So you can join. Then that's where you can drop all your questions, and I'll do well to answer it in our next class. Let me pin it. So that's it showing on the screen. So that's it. You can tap on it. Okay, can you talk on 1:2? This is it here. I think this person is a total beginner. Beginner has plenty true, as someone said. So now 1:2 means this is what I mean for the strategy for it to work for you. 1:2. Now, if you look at this stop loss, this is 3.1. That is 31 pip stop loss, right, on gold, which is 310 points, right? So now this 31 pips on gold. If you look at this risk reward ratio, this part here is 6.7. So it means that anything I'm risking here, if I'm risking $100, I'm risking $100 to get times 6 of it. So I'm risking $100 to get 600. So 1:2 means that it should be 1:2. It should be 2. Now this is 2, right? 2.5, right? So it means that if I'm risking 100, and I'm risking 100 to get times 2 of it, which is I'm risking 100 to get 200. So if you are risking 100 to get 100, it doesn't make sense. Even in a normal business, if you buy a phone, right? If you buy a phone for 100K, you want to sell it with profit. That's how trading works. Treat trading as a business. I think this is where we get it wrong. If you buy a phone, right, you want to sell it like higher price. Maybe if you buy it 100K, you even want to sell it 150K. There are some people that want to go as far as to sell it what's it called, 200K. Right. So if you invest 100K or 200K to your business, your phone business, or 1 million, and you bought for 100K, you want to be selling them maybe 120, 130 to make profit. You won't want to start selling them 90k, 80k when you bought it 100k. It doesn't make sense. That's not even advisable. You, at the end of the month or end of the year, you run in loss. That's how trading is. So if I risk $10 here, I risk $20 here, and I'm getting, let's say I risk $10 and I'm closing my trade once. I see $8, I see $9, I close, $10, I close. It doesn't make sense. So in business, in physical business, if you do that particular stuff, you won't come out with profit. Instead, you'll be coming out with what? Losses. So in trading, the business part is that you want to risk one, then to get 20. That's where it comes. That's where it makes sense. So if I risk 10, I want to come out with 20. So if I do it consistently, even if I have lost today, I win tomorrow, I win tomorrow, I will have lost two in like two loss in a row. I win one recovers everything. That's how it makes sense. But if you lose two rows, you win one and it's just $10, you only recover one loss, you lose it. Like, it doesn't make sense normally, right? So in business, you won't want to do it like that. Your physical business, you won't want to do it like that. So same thing you should do on your trading too. Risking one to get times two. We'll talk on it tomorrow. Don't worry. We'll get we'll really deal on it intensively. So all these advanced, I think most of the questions here are advanced. Yes, I think most of the questions here are advanced. So what we'll do is now join the Telegram group, right? Fill those forms, drop it. I can reach out to you personally to answer your questions. I'll send message to reach out to you personally to answer your question, or would now answer everything tomorrow in an advanced class. Okay, so all this part I'm seeing is advanced questions. All these things are not beginning. I was thinking I will be seeing something like talking of the strategy, like what I just taught now. You get, but what time tomorrow? Same time, 9 p.m. Nigerian time, GMT plus one, I guess, Nigerian time. So same time. Okay. So I think that's it. I think that's it. I'm not seeing any beginners questions again. It's all these questions are advanced. So most times you trade breakout zones. Yes, all this is answer them tomorrow. Don't worry. Tomorrow we'll spend more time. 2 hours. Today is just like an introduction. All right. So tomorrow we'll do it very well. So I'll try as much as possible to start posting a YouTube section, a live YouTube section. I can't see the form. Yes, I've not dropped it on the group. After this section, I'll drop it on the group. Okay. So I'll try start posting live YouTube section. So those people that used to be like, you used to trade, you don't trade life, you will see it now. Calm down. Okay, so guys, no problem. Giveaway they come. We'll have giveaway. It can be a physical one-on-one section for free for 1 month. It can be like, just don't worry. Because the main aim is for everyone to become profitable. Most people here already knows my journey. They know how I started 2 years ago. You get, so, and where we are today, right? So, but I know most of you after this webinar will still have same results. You understand? Just give yourself time, right? Give yourself time. Don't rush forest. If you rush into forest or rush forest will rush you out, right? So it's a gradual step. It's not a get rich quick scheme. So if someone tells you that I have a strategy that is 100% win rate, run away. There's nothing like 100% win rate. If a person truly has a strategy that has 100% win rate, then they shouldn't be lost. Go full margin and hit TP. But if it's telling you now use proper risk management, then it tells you that, hey, you get this trouble. Okay. So someone said I should drop the link again. Let me drop it again. I dropped it. The questions are just pushing it up. I've dropped it again. Okay. So guys, I think that's it. Do well to like, subscribe. At least this is a free section. If you just share it so that it will reach more people. Okay. That's all you can do for me. You understand? I think that's all for today, and guys, bye for now. See you tomorrow. Same time, right? Good night, guys. And good morning.